warm welcome to our viewers here in Nigeria and around the world. Welcome to your Business Morning. We're starting the month of April with these highlights of the big business, economic investments and market story across the country. I am Bosin Amafaye. Less politics, more policies expected as President Buhari gets sworn in the second quarter, names his cabinet and expected to hit the ground running on critical issues of his 4x4 economy, which includes the implementation of Budget 2018. But also, as we start in today's business day, goodbye to the 8th National Assembly and welcome the 9th Assembly this quarter as business, investments and markets wait for the closure on Budget 2018 and underpaying matters before the legislature. Meantime, sources told Business Morning today that the GT Bank Innocent Motors feud will be handled by the banking supervision of the Central Bank of Nigeria. Sources says the Banking Supervision Department will step into the last week's judgment and its enforcement orders, which is making headlines in the news and also online. Meantime, today, Market Street is welcoming the rebranded Access Bank, and this is saying a final goodbye to Diamond Bank on the conclusion of the business combination between the two lenders. Over the weekend, Moody's Investors Services issued about a 4-page document on the ratings now being put together for Access Bank and, of course, Diamond Bank. This is giving you a bit of the highlight of the ratings report, which was released over the weekend by Moody's. It confirms the long-term deposit rating, which is B2 of Access Bank. Access Bank has also gotten a stable outlook. The outlook on the long-term deposit ratings, long-term issuer ratings, and senior unsecured rating changed to stable from ratings under review. The report also says there's a downgrade. Moody's says it downgraded the baseline credit assessment, which is called the BCA of Access Bank, to B3 from B2. We'll talk about that later. Then you have the long-term CRR also rating of Access Bank by Moody's cut down to B2 from B1. According to the Moody's report, the confirmation of Access Bank long-term ratings with stable outlook on the merger with Diamond Bank balances Access Bank's deterioration in standalone credit profile. Quote, the rating agency says the downgrade of Access BCA, which is the downgrade of Access Bank BCA to B3 and B2 reflects Moody's views that there will be a weakening of the bank's credit profile following the merger with Diamond Bank, despite immediate improvement to Access Bank's funding structure and long-term profitability. Moody's went on to say that Access Bank's capital and asset risk metrics will deteriorate given Diamond Bank's weaker credit profile. But what will the new Access Bank look like, which of course you've seen the logo being unveiled officially today there, and of course you see across the country. The market share of Access Bank within the Nigerian banking space now increases to 14.8% in deposit terms against the previous 10.3%, which was as at September last year, according to Moody's Bank. The combined customer base of Access Bank, new Access Bank, is now will be 29 million, and Moody's says Access Bank is now the largest bank in Nigeria by the size of the customer base, 29 million. The Moody's rating agency went on to say that the external support from the Nigerian authorities will be forthcoming if needed, as Access Bank is now a bank of systemic importance. However, capital and asset quality deterioration offset funding and profitability benefits from the merger. And that's the final line there that everyone needs to understand. According to Moody's, the capital and asset quality of the new Access Bank deterioration offset the funding and profitability benefits from the merger. We have analysts still pouring over these reports starting from today. I'm just giving you the highlights as it were. We'll talk more about Access Bank in just a few minutes, but we have some other banks who are talking about reloading on our Market Street. But let's get in Temple Ashaju, our business correspondent here, bright and early, to take us through. Last week, we managed to finish off nicely on the positive reading across our market, stock market, as the NSE, the NESD, and of course a very active trading at the bills and bonds window. Temple, good morning. Coming here, it's good to have you on the program. Looks like the earnings that came in towards the end of last week gave the market a bit of buoyancy, and then we had a very positive reading, the final trading day in the month of March.
You're right, Bosun. A lot of those earnings actually drove up the performance of the markets, especially on the last trading day of the week, which is Friday. And that's because, again, some of them are declaring some dividends, even though we know that quite a number of them are flat. There was no difference between what they paid in 2017 and what they're paying out for 2018. But that's eventually still short of the performance on Friday, basically. But then generally, last week we're down some 0.31% in terms of the index, even though we saw some good appreciation around the market capitalization for the week on week. We actually closed equity capitalization at 11.67 trillion naira. We saw the month-to-date and year-to-date performance increasing marginally. Month-to-date rose 2.1% and year-to-date rose to 1.2%. But if you take a look at the activity level, things were quite appreciative as well. We saw volume at 2.62 billion. We saw value at some 12.79 billion naira, and all that took place in 558 deals, actually. That's about the same thing we saw for the preceding week. But if you take a look at the sectoral performance, banking sector was down 2.84% for the week. The consumer goods segment of the market rose some 1.07% because we saw a bit of re-entry of some investors on that sector across the Unilever, for example, that is paying out some good dividend compared to the 50 kobo that it has done before. It's doing some 1.50 kobo this time. Industrial goods segment of the market was down 2.42%. Insurance was also down 1.96%. But for the oil and gas segment of the market, it was positive 3.56%. In terms of the energy stocks that we track regularly, we have three of them that moved positively for the week. They are all the numbers that actually changed for the week, for Friday specifically. Corn oil didn't move. Forte oil remains static. 11 PLC increased on 4.71%. MRS was unchanged. O&O remained static. Seplat changed some 9.26%. And if we take a look at Total PLC, Total is paying out a dividend of 17 naira, which is the same thing that he did for 2017. And we saw that the bottom line was not so impressive, perhaps because of the investments that they had done, across the Gina oil field. But then it changed, it remained unchanged. And Etana PLC rose some 9.28%. Global Spectrum, Japol PLC, Capital Oil, and of course RAC Unity all remain unchanged. In terms of the unlisted securities segment of the market, we saw an appreciation of almost 1%, 0.96% specifically, and market capitalization closed at 544.39 billion naira. In terms of volume, just 764,291 were the deals done for the week, and of course we saw just 38 deals across board for that last week. For the debt segment of the market, the treasury bill side of things is bullish, and bonds was also bullish. In terms of the bonds, proceedings saw adjustments to the MPC rate cut, which was some 50 basis points. The average yield eventually compressed on 14 basis points week on week to 13.99%. And for the treasury bill side of the market, we saw yields also falling some 11 basis points week on week to some 13.55% at the end of the day, because there was actually more contraction of the yields across the short and the long end of the curve.
Yes, Temple, quite a lot there to chew, but last week came in very strongly there. We'll get more. On the bond side, Temple, Access Bank is unveiling its green bond today at FMDQ OTC Exchange. We'll get to talk about that a bit later. This is a big day for Access Bank, of course, making a very big showing on the day he's been rebranded and unveiling his new horizon, and also coming through with his Pioneer green bond by a corporate on our market. Very big day for those who are watching our markets today here in Nigeria. Thank you, Temple. But again, of course, you are holding forth there with Jolomi Odongaro, who is an associate and team lead for fixed income at Afrinvest. And of course, I'm sure he's going to be chewing over some of the big stories around the earnings that are on the street. But of course, the big story around Access Bank is that the bank has unveiled its new logo. You see that already. It's a combination of Access with Diamond. And of course, today, formally today, Diamond Bank is bowing out of the market, with Access Bank now the largest bank in Nigeria by customer base, according to Moody's Investor Services. The US-based rating agency says the new bank, Access Bank, will have 29 million customers, making it the largest bank in Nigeria as of today. But of course, the ratings, which was reported or which was released over the weekend, and we're reporting that for our viewers here this morning, has a lot to unpack there. So let's allow Temple to take this up with Jolomi and a few other earnings there on the street. Temple, here you go.
Yeah. Right, thank you, Bosun. Jolomi, thanks a great deal for your time with us. I guess, of course, you've seen these ratings by Moody's Investor Service on Access Bank and, of course, Diamond Bank. The merger, they're basically confirming a lot of the status there for Access Bank. We've seen some upgrades, but we've seen a whole lot of downgrades there. What was your initial view of those ratings first?
The rating is not in and of itself surprising. I mean, the maintenance of the stable rating on depositor rating is basically saying that if you look at the statement, it says that basically Moody's expects government support in the event that there's any issues with Access Bank, which is why the stable rating has been maintained there. But where the downgrade comes in, they're looking at the fact that Access Bank is taking on an undercapitalized balance sheet, as well as substantially weaker assets than they have. And so, in and of itself, it's not surprising. I mean, we do expect a significant amount of deterioration in the assets going forward. I mean, the risk management frameworks for both banks are miles apart. Access is a tier 1 name, and it's a systematically important bank, whereas Diamond is not exactly on the same level. And so, there's nothing in the report that is particularly surprising. And all in all, we expect Access to be able to manage the issues going forward.
But one of the key things that the service actually said is that Access ratings could be downgraded if the bank's credit profile continues to deteriorate materially in a way.
I mean, it's not surprising. I mean, if you remember back to when, right after the measure was announced and the increase in the NPL level from what was reported by Diamond to the level that they said they were going to have to downgrade the assets by, it gives you an idea of the sort of the risk profile of Diamond's book. And so you would expect that Access would take steps to manage that book and keep the quality high, which means that a significant amount of remediation, which means that you make sure that your clients are paying and you chase down any non-performing loans to a high degree. So, I mean, there's that risk there, but Access has taken on this risk, and I imagine that they will be able to manage it going forward.
So I know that whenever we talk about banks combination or business combination in the banking sector, it has a way of becoming worrisome to depositors, more specifically investors. Keep their ear on the ground. They get to understand these things better. Yeah. But when it comes to depositors, let's try to help them understand what some of those ratings actually imply. It says deposit ratings with stable outlook of B2. In terms of the local currency and, of course, foreign currency. Local currency issue deposit rating is to B2. Foreign is that of B3. But then we also saw an upgrade across some portion. What does that really mean for an average depositor in Access Bank and, of course, Diamond Bank now?
I would look at it this way. A depositor should not particularly be worried. And that's what this rating has basically said. That, look, yes, the risk profile of the combined entity is a lot higher, but we maintain our rating on basically saying the depositor risk is close to the same as you had in the original Access. Okay. And Access is a tier 1 name, and so basically Moody's has said that, look, from a deposit point of view, you're fine, and there isn't much risk to you. And they balance that against saying that, look, if there is significant risk in this business, we believe the government is going to step in. And yes, this is a systematically important bank. The government will step in if any issues arise.
So basically what this means is that depositors, don't worry about your deposits. Your deposits in Diamond Bank, they are safe. Moving now to Access Bank, you still continue to do your regular banking. You have access to your money. Nothing is going to happen to your fund at the end of the day. But then let's look at the downside of things. It says Access Baseline Credit Assessment, that's the BCA, has been downgraded to B3 from B2. Long-term CRR, that would be cash reserve ratios, downgraded to B2 from B1, while the long-term CRA has been downgraded to B2 from B1.
Yeah, I mean, this just reflects what I mentioned. There is a significant amount of risk in Diamond's book as compared to Access. And when you combine the two books, that just means that there's more risk being introduced into a better quality asset base. And that's what they've just reflected.
So what do you think this combination, how do you see this combination of business helping them to mitigate all of those risks?
The risk is, the mitigation is going to come from the Access side now. Access already has a pretty strong risk management framework. I mean, the NPLs have been at moderate levels all through the years, nothing compared to Diamond Bank that was above the regulatory threshold of 5%. We were about 6.3% as at the last reported numbers at the 9M period. So basically, you just look at it like this. Access's risk management framework should allow them to mitigate the overall increase in the risk of the combined book.
Okay. We know that both banks actually have some Eurobonds tradable, I think, in the London Stock Exchange and, of course, on the E&M emerging markets and, of course, the frontier markets and all of that. Yeah. These firms are tradable there. So going forward, what becomes of that of Diamond Bank, which I think was actually supposed to be
it's matures in May.
In May, actually, yes. And that of Access Bank is much later in the year or thereabout.
Diamond Bank's matures in May 2019, but Access Bank is calling that Eurobond. They have a callable Eurobond, and that's 2021 Eurobond that is going to be called this year. I think it's about June. No, it now comes down to Access has bought the liabilities of Diamond Bank, and so Access is going to service that liability. So when it comes due, it becomes Access liability to pay, and Access has the liquidity to service this bond. So I don't see it being an issue for investors.
They even have a green bond that will be listed here today. Well, before we run out of time, we've got Wema Bank, FCMB, Sterling Bank, and of course Fidelity Bank numbers to quickly take a look at. What do you make of FCMB Bank? It's paying out some 7 kobo, 43 kobo actually in 2017, but has now increased for this year, 2018. So we're saying a dividend of I think 14 kobo. Thereabout that we paid. But gross earnings generally, which is the top line now, rose some 4.3%. Give us a sense of what your views are.
I mean, for most of the banks, and even with FCMB, what you find is that top line expansion wasn't significant. But by the time you get to the bottom line, it was far more significant. And that comes from the reduced risk in the environment, which means that credit impairment charges are far lower. So even with moderate increases in operating expense, what you find is a good bottom line expansion, which has allowed them to pay out a good dividend to investors. I mean, the numbers are positive, and it's in line with the sector so far. Now, we've seen numbers from Guarantee, we've seen numbers from Zenith, and this theme follows through the sector. And you see not too significant increase in the top line. That's because, again, credit risk extension was weak because of the risk in the environment. But so by that's reduced impairment charge because of less risk. It translated to good bottom line expansion. So
two key banks are actually doing not so much difference in terms of their dividend payouts. Wema Bank is paying out just 3 kobo, yes, after seeing a very, very impressive number for 2018. Yeah. Fidelity Bank has not changed; it's 11 kobo, basically flat.
Yes, I mean, again, you pay out. You have to balance the risks. So for them now, when you have such an impressive bottom line, because across all of them, what you find is moderate top line expansion with a very good bottom line expansion. Like I said, it comes down to reduce expenses, but they have to balance it out now, because at the end of the day, business growth is going to come from what you retain. So yes, the bottom line expansion is very good, but you have to measure that against business growth and the cost of debt in the market. So I don't look at it as a negative. I look at it as a positive, actually, that they maintain the dividend payouts and they have enough to drive business growth without increasing the cost to the business. So it's absolutely a good one for me.
But when a bank like Sterling Bank does very well and it's not paying out, it hasn't announced any dividend.
But I mean, again, it comes down to how the bank is going to grow. Because at the end of the day, Sterling Bank, for instance, has quite a lot of debt outstanding. They have syndicated loans, they have corporate commercial paper, they have quite a lot on their books. So at the end of the day, the bank has to grow from somewhere, and it has to look internally for that growth.
So it's for investors to actually just defer the gratification, basically.
If you delay that gratification and the bank expands significantly, when you get to that point, they will pay out, yes.
Jolomi, thanks a great deal for your time. We appreciate your thoughts here.
Yeah.
Jolomi, of course, this with AfriInvest. Back to you, both.
Yes, Tempo, taking a very good listen here to that conversation about the banks. Of course, that conversation will continue after the break with the man from Unity Bank. The bank says he's reloading. How did he achieve those very positive numbers for 2018? We'll take all of that up with this man, Abdul Qadir,